Hello guys, how are you doing? Casper here. It is the 17th of August and we will do a Twitter recap. I haven't done this for the past 3 days, so the charts might be a tad old. It is what it is. As always, guys, follow me here on YouTube, on Twitter, and on Substack at uselink.inv if you like the content. With that said, let's get straight into business. Straight into business here. I have a lot of charts for you to show. So yeah, here we have Dollar Trader AG. Remember, this is, August the 13th. So you're talking, I think that's Wednesday or so. So midweek. AG, a now nice bounce of support. The bulls continue to hold momentum. Just look at that flat, support. It has basically held support for the past 5-6 years. Again, and we are seeing a rally here. And yeah, I think silver miners and especially gold miners right now looks extremely good. Extremely good. So, and also, by the way, the peak there from the silver squeeze madness at roughly 23, we are now at roughly 5. This is where you buy low. Buy low. Not buy the lowest, but again, you are into support. You're seeing a bounce here. Silver had an amazing week. Just my opinion. Just my opinion. So, Stoic Silver Bay here with SILJ divided by silver. So this is a ratio chart. On the weekly, critically closed back above the 200-day moving average and minimum weekly cloud support last week. Again, I don't know the cloud, indicator that much, so don't ask me any questions. I'm sure Stoic Silverback can tell you more if you want to learn more about that indicator. I noted last time back in the cheap but not the perma-bearish conditions versus the metals within this range may have bottomed. So you can see here we have actually for the past roughly 1 year, basically a tad more, like 16, 17 months, trying to base out here. A huge false breakdown there, by the way. This was extremely scary. And if we get above 0.43 here, we are basically back in an uptrend, in my opinion. If we can crack it here, testing, and then we are good to go. Remember, this is the silver miners outperforming silver. And I think during this period, silver will do well. But if this holds true, the silver miners will do better. So finally, we are there, I think. Patrick Karim, Dow Jones Industrial Average priced in gold. Cool. Very cool ratio, by the way, and important. Only the fourth time this has happened in over 100 years. I repeat, 100 years. That's incredible. Only the third time since gold was unpacked back in 1971. You can see that right here. US stocks are very close to probably implode in the price of gold. And when that happens, the commodity bull market kicks into gear. The commodity bull market was from 1970 to 1980. The commodity bull market started here just after, the dot-com bubble in 2002 and rallied until 2011. We are there again. It might take a little bit more time here. You can still see the moving average, which is the 36 moving average. So that's a very long moving average because we are on the 3-monthly time frame. It still needs to turn over really for that big pressure, but it's getting close here. You can see here every time we touch it there and there and here now, we are going lower. We are going lower. Same thing over here, going lower. So commodities, the bull market is now back into full swing. It is just, it sounds cliche, but it's just getting started in my opinion. Fantastic. Stoic Silver Bear here. This is the gold to silver ratio on the 4-hourly. I assume this is the 13th. So we're talking Wednesday or Tuesday. This is a short-term bearish chart for silver until further notice. Contrary to previous posts today, it remains in an uptrend till it loses that 4-hourly cloud, which is successfully back-tested Monday along with the major pink declining form resistance. So you can see here the cloud is acting as support. And We did see after this day here, the next 3 days, we actually saw some pretty big, down days for this ratio. I'm just going to check here. We are now at 86. So we are down here somewhere, still above support, but we went down pretty hard, pretty fast, and we basically need to get below. Based on this here, I will say below 87, 86.5-ish down to here. Then we have lost a lot of support, and potentially we can go lower. But I agree here, it's still in an uptrend, but the last 2 days were we went sharply down. So that's the first big steep drop in a long time. Again here, Stoic Silver Bear. The Dixie, the DXY, rejected it hard on the weekly cloud recovery attempt, seemingly confirming the breakdown. Let's see how the week ends. So the Dixie, where did it end? 102.4. So we basically went down, from 103.4 to 102.4. So we're talking 1% or 1 unit. I don't know the exact unit for it. And also, if you draw a trend line from here to there, we're basically sitting right there. And if we start to move down further, again, the Dixie is very close to rolling over and or to break down big time. I do think we can have a little bounce before, because we have 1, 2, 3, and then we crack on the 4th. But there's a lot of downward momentum, short term, on the daily, on the weekly, for the Dixie, the DXY, and that is extremely bullish for commodities. Holy Stoic Silver Bear again here with the gold. On the 4-hourly chart, as we know now, gold busted through the 4-hourly cloud after successfully holding the blue pivot. Now it is at an interesting point. It seems to be forming a mini flag below major resistance area, just below all-time highs. That's the all-time high. This might decide the fate of silver as well in the short term. If it gets rejected here, the gold to silver ratio will likely converse, continuing to rise, and silver will get hit harder, probably going to retrace to the 200-day moving average. It looks strong so far, though. And I can't say we did break through. We closed all the way up here. I think we closed at 2,500 into extremely big resistance, but we did take this structure out. And that's also, we broke, and silver started to outperform gold. Pretty cool. Pretty cool. This is a post that I did, it seems. Gold here did break that 2,438, and it rallied. It was based from a previous tweet. Now the big level of $2,480 is where it stands for open skies. You can see here we are breaking, and we did break, and we have rallied very, very far. We are above my homemade, what's it called, momentum cloud, momentum area, whatever. And gold just looks, yeah, like I say many times, there's nothing wrong with gold. Trend spider here with ARM, undoubtedly one of the weaker semi names in the sector, wide bounce, worth nothing. And this is a really good example. We have a huge downtrend. You start to see a bounce, but look at the bounce compared to the steepness here and the angle here. Low volume. This is all day, every day, a bear flag. Could it resolve to the upside? Of course. I mean, but this has a very high probability of continuation into a big volume node here. I'm expecting it to potentially go down to maybe down here at this volume node at 70. So just textbook downtrend, retrace a bit here, bear flag, continuation. TAVI. The 2-year yields have likely peaked for this cycle. I agree, it is rolling over. And the recent downward trend is probably going to accelerate to the downside as the Fed panics to reverse its policy stance. I also believe that they have held rates way too high. They are always, well, not always, but they are very, very often late to the game. Just look back in 2021, where they didn't raise rates, and then all of a sudden we had inflation, and then they had to cut it, and they are just, you know, they're what's it called, the PID regulation controller. They are not in sync. They need to tweak that for sure. If anyone know what I'm talking about, you know, PID within system controls, you know exactly what that means. I think it's the P value, actually, if I'm not mistaken. Anyways, that's a different topic. It's important to keep in mind that historically, falling short-term yields tends to be very bullish for gold. I like that, which appears to be entering another phase of rising prices after recent consolidation. You don't want to get in the way of this train. Gold on top looks bullish across the board. Yes, there will be pullbacks, but basically you are bullish on all the extremely long-term time frames, monthly, 3-monthly, weekly, everything below the daily, 4-hourly, whatever noise across the, maybe in the weekly. The weekly, in my opinion, right now is also noise. So, and you can see the 2-year yield rolling over right here. So I think we're going to come down quite far, actually. There is a trend line here, by the way, which is at roughly 2%. And let's say we bottom at 2%. That will be also the last time, in my opinion, you will be able to get this low rates for many, many decades. You can see here that ever since 1980, you have seen lower highs and lower lows on the rates. But now that has changed with a major higher high, and we will see a higher low here somewhere. And then we're going to see high rates, a lot higher rates. And that is because inflation is back. And you can see that, you know, on the mainstream media, inflation is over. We have won, yada, yada, yada. Let's check back on this in like 3-4 years' time. It's going to be a different tone. Grady, that's a very good looking chart for the precious metal miners, SILJ divided by the GDX. And wow, that's actually a pretty good chart now I think about it. Anyways, and why is that important to measure the SILJ versus the GDX? The reason is that the GDX is a lot of very big, very, very big gold miners, the big names, the 10 billion, 20 billion, $30 billion gold miners. And right now you can see that the juniors, the silver juniors, is about potentially to outperform those guys, meaning money is flowing in to the precious metal miners. You will not have a scenario where you are in a bear market and the juniors will outperform. Usually the big guys will drop, yeah, but the silver juniors will get crushed if you are in a bear market. Very telling, in my opinion, extremely telling there. Kevin here, North Star, the stock market, the next move for the SPX could be exciting, whichever way it goes. This was posted on the 15th, so that is Thursday, and I think Friday was pretty good, so we are actually coming down. I think we might have broken out here. I would have changed that trend line to here, by the way. Just my opinion, going week to week, but hey, it's not big of a deal. But it has come really far here, and I would be surprised if we start to just keep going here and we're going higher. Again, the market has been really strong, but let's see. Sammy here, fresh all-time highs for gold. Yes, indeed. Fantastic. Our targets remain 3,000, 3,200 as per the chart. So this is actually a really cool fib. I actually went in and did this extension myself. I couldn't get the alignment perfect, but I could only get it to here. Anyways, different story. But basically drawing the fib there all the way down, and you can have the fib extensions on top, the 1.618 and 2.618 and so on, and you get all the way to 3,240 bucks for gold. And if we start to, let's project this a little bit here, we could see that in the start of 2025. And it sounds, 3,000 gold sounds a lot, but we are now at 2,500. So we only, in quote, need gold to go up 20% to reach that. 20%, that's all we need. Again, in quotes, again, that's still a big move. When I saw this chart, by the way, I was like, holy bananas. This is the game of trades. History tells us it's about to get ugly. More inversion days equal deeper drawdown. We are already at the moment at plus 750 days. This only occurred in 1929. A thread, by the way, read it. It's really good. Basically, what this means is the number of days inverted is very, correlated to the amount of drawdown in percentage term that we saw the markets do. This is here. It dropped 90%. 90%. That's wow. If that's the case, which I think it is, until proven otherwise, we are in for some pain here. But don't expect it to start to drop heavily on the first day of inversion, on inversion. Again, it could take, 3 months, 6 months, a year, maybe even a tad longer, but it will definitely come. Again, this is one here. Remember Newton's 3 laws of trading. Nothing would change the trend unless there's a catalyst for the external events. 2, when it's obvious to everyone, then it's over. Very important, by the way. When everyone convinced that the opposite will happen. When everyone is convinced, then the opposite will happen. Would it be different this time? So this was just a fun tweet here by Trump here, the Kamala crash, basically low-ticketed, more or less. Again, it doesn't matter if it's Trump or whatever, but usually you see these tweets from maybe Trump or Biden or Kramer, whatever, and they are usually, among the herd and always on the, the last one to do like a tweet. We're crashing and then we rally. So quite funny. But these 3 here, 1, 2, 3 points, pretty cool. Pretty cool. Cool. That is all I had for you today, guys. I hope you liked the charts. And yes, I'm sorry that, I didn't do them for the past 2-3 days. Have a great day, guys. Stay safe out there. Cheers, guys. Bye.